said, please God, give me one more bull market. I promise not to waste this one.
Hi, my name is Georgia Tucker with Cambridge House. If you've attended our conferences, you may recognize me from the newsletter Walking Tours. I'm super excited to bring you today's episode where I'll be interviewing industry legend Rick Rule, CEO of Sprott US Holdings. Rick has been a friend of Cambridge House and a frequent speaker for over 30 years. We'll also be featuring Dr. Mark O'Day, founder and chairman of Oxygen Capital Corp. If you like this video, please like and comment who you'd like to see next, and subscribe to the Cambridge House channel for more awesome investing content. A few weeks ago in an interview with Jay, our CEO, you referred to being anti-fragile. So that's a concept, I believe, from the scholar and author Taleb.
Cash and bullion make you anti-fragile. The way that you make this a better world is for everybody themselves to be more anti-fragile.
So he defines anti-fragility as beyond resilience or robustness. So what does that mean to you, and how does the notion of anti-fragility relate to gold?
Let's say, just for fun, that there's a young, successful millennial in Vancouver, and he or she has excelled in school and has a wonderful job, and they've somehow managed in the Vancouver real estate market to buy a house under the view, which has been supported since 1982, that real estate prices in Vancouver don't decline. And they have a 75% mortgage. That is, 75% of the price of their house was covered by the mortgage. And they have a couple of cars. They like to live well, and maybe they have a bit of credit on the cars. And they have a stock portfolio, because everybody has to have a stock portfolio. And the stocks in that portfolio err on perhaps the risky side. Maybe pre-revenue technology companies. Maybe these millennials have invested in something they understand and do due diligence on, like marijuana, as an example. This is a fragile lifestyle. This is a very, very fragile lifestyle. We're in a circumstance now where approximately 25% of the working population of North America, irrespective of age group or educational background, are or are about to be unemployed. 2 times since I've owned real estate in Vancouver, it's fallen 50% in price, despite the fact that Vancouver real estate never goes down, which is to say that that 25% equity could go to equity heaven. And having debt on items that depreciate, which is to say consumer debt, is suicidal, even for the most aggressive and competent people. The anti-fragile portfolio would be perhaps to have one's starter real estate, and I do advocate owning real estate. Large cash balances are good too, despite the fact that, as I said, the purchasing power of your cash goes down every year. The truth is that having access to liquidity makes you anti-fragile. It makes you precisely better and better at times like these.
So you had an interview a few weeks ago, I believe it was with the Follow the Money investor group, where you had said that this market could be a new beast in comparison to previous crashes. Can you speak further to that?
There's that saying, I don't know who to ascribe it to, history doesn't repeat, but it rhymes. So that circumstances like this follow broad patterns, but every one is different. The threat around this one being different, particularly different than the 2008 collapse, is twofold. The 2008 collapse occurred as a consequence of a financial bubble. And I would argue with you, Georgia, that the circumstances that caused the 2008 collapse weren't addressed after the collapse. People mistook the symptom for the disease. It's certain that in the immediate aftermath of that problem, 2 things happened. Liquidity vanished because trust disappeared. And rather than dealing with the cause of the crash, which is to say profligate financial practices, particularly by government, the governments themselves went to deal with the symptoms. They went to deal with the lack of trust by adding massive amounts of liquidity into the system, which is to say that they gave us a bigger dose of the disease to cure us from the disease. Fast forward to today, I think you have a circumstance where the underlying causes of the sickness weren't addressed, and probably a little scarier, new amounts of stimulus and new amounts of debt finance, which is to say, new amounts of liquidity, don't buy the same level of economic growth that they did in 2008. When you, there's no polite way to say it, when you goose an economy with an injection of liquidity, what you really do is you steal demand from a future period. You front shift demand that you would have enjoyed in 2021 or 2022 into 2020. The problem is that come to 2021, 2022, that growth is missing. So you either have to have a reckoning, which is to say that you go through a period of less liquidity, less growth, less jobs, less good times, or you have to steal demand from 2023 or 2024. We have been, as a people, basically stealing liquidity since 1990. We have been forward shifting demand since 1990. And we have a circumstance now where the prevailing sentiment is don't fight the Fed, which is to say that the big thinkers of the world can get us out of anything through intelligent legislation or printing more money. From my point of view, our difficulty is that we have entrusted our financial future to the big thinkers. And the big thinkers' real period of thought, if you will, corresponds precisely to the time between now and their next election. So the idea that they have some plan, at least some good plan, which will help you through your lifetime, suggests that you're only going to live through the next election cycle. And I suspect, looking at you, that that's an improper assumption. In the very near term, most people don't want to take responsibility for their future. Most people want to believe that Trudeau and Trump and God, I hope we never have another leader with the first three letters TRU. Anyway, most people want to trust and put their faith in the big thinkers because they don't want to take responsibility for their own financial future. But that's a very fragile rather than anti-fragile response.
I know that you play personally bear markets aggressively and it's done you well. I've heard you say multiple times, be a contrarian or be a victim.
You are either a contrarian or you are going to be a victim.
Absolutely.
But what helps you take the emotion out of buying when everyone else is so fearful?
One thing that any successful speculator has to have is a very high tolerance for failure. You need to understand that most of your speculative decisions will be bad. And that a few good speculations will amortize the losers and leave room left over for an acceptable return on capital employed. And I think that one of the things that stood me well as a speculator is, although I've been aggressive in down markets, I haven't been stupid, which is to say that I haven't tried to buy the lowest quality stocks, which might come back the furthest in a turnaround. I have used bear markets the way you, as a consumer, might use sales.
So everybody has a theory about where gold price will go and why.
I've heard, 500 narratives about what makes the gold price go up. People hate Trump, gold is up. People hate Trump, gold goes down. People are afraid of North Korea, gold goes up. I don't think any of that really over time matters. What has mattered in my life has been real investors' expectation of the continuation of the purchasing power of the US dollar.
So you've been doing this for over 40 years. Is there anything that stands out as a gold price indicator that investors should always be paying attention to?
Absolutely. Real interest rates. Fear propels the initial move in gold, no doubt about it. After the fear buyers established momentum, then the greed buyer kicks in. But the thing that kicks it off is fear. And the most important fear that I have seen expressed in my career, 45-year career in this business, has been fear of the degradation of purchasing power of savings instruments, particularly in the US dollar, the world's reserve currency. If Canadians become afraid of their political leadership and their economy, they can always buy US dollar denominated savings products. But when we have a circumstance as we have today, where it's pretty clear that there's no savings product denominated in any fiat currency issued by any sovereign or bank in the world that will protect your savings, then for some portion of your savings, you need to be involved in an asset that can't be counterfeited. It can't be quantitatively eased. And it isn't somebody else's obligation. It's payment in and of itself. The circumstance that we see today is absolutely tailor-made for gold. The benchmark currency in the world, security in the world, the one that everything else is priced off, is of course the US 10-year Treasury, the deepest and most liquid security in the world. That, the last time I looked, that was paying investors 60 basis points, 0.6% per year, in a currency that the Congressional Budget Office, not some old libertarian crank like me, suggests is depreciating at 1.6% a year, which means that maybe for the first time in your life, Georgia, that the US government has told the truth. They absolutely guarantee that they will give you back less money that you gave them in 10 years. That's how you compensate for yourself for the risk. And that is very, very, very good for gold.
I wanted to ask you about your personal portfolio. What approximate percentage of your portfolio is gold, and do you increase or decrease that amount based on the current cycle?
I have to admit that if any rational person looked at my portfolio, I own too much gold. I say that because I'm the largest shareholder of Sprott Inc., which is a Canadian domiciled listed company that has become in many senses a brand name for gold investment. If the gold price does well, Sprott should do stupidly well, and I should do spectacularly well. Gold enhances my sense of well-being. It helps me sleep nights, and I can afford a sleep aid.
So you've mentioned these names so many times, and you've said in the past, if I would have stuck with the big names, you could have worked less hard and made more money. So some of those names being Friedland and Beatty, Lassonde, Lundin, Quartermain, and so on.
Had I worked less hard over the last 40 years and just hung out with Robert Friedland and Lucas Lundin and Pierre Lassonde, Bob Quartermain and Ross Beatty. In other words, had I confined my efforts to the 10 or 12 most talented people I knew and not paid attention to anything else, I would have worked 25% as hard and made 3 times as much money.
So for the next generation, you've mentioned Mark O'Day several times, who's the chairman and founder of Oxygen Capital. What is so special about Mark O'Day?
Well, I hope we have the ability to unpack that later on. Mm-hmm. First of all, everybody knows Mark now as a good businessman. I mean, he's a very, very, very solid businessman. Negotiates well, constructs companies well. He has done a good job attracting and motivating a team. What we forget was at the beginning of his career, he was a wet behind the ears geologist, but a good one. I mean, a really, really, really good geologist. Many of us forget with Ross Beatty and Bob Quartermain that they worked a decade in geology before they became overnight successes in markets. And this circumstance where you have a brilliant technical person who is also a great commercial person and who is motivated to becoming great is what I think the combination is. If my memory is correct, we financed Mark in Frontier the first time through at 50 cents. And I remember coming off that phone call thinking, you know, if this doesn't work, there's a reason why, but it's sure not apparent to me. This young guy has very, very good ideas. He has invested what money he has in the idea, so he's my partner. He's not my employee. His technical explanation of what he hoped to achieve and how was in depth, but importantly, he understood it well enough that he could say it in English. Some people have to default to polysyllabic words to get an important concept aside. And I remember in Mark's case, he was both eloquent, but he was so deeply knowledgeable. And he was so completely immersed in his subject that he was able to impart that wisdom to me on the first pass through, which is not always easy to do. And that impressed me right away.
That was a wonderful, glowing review. I think we should bring him on, and I will let you continue over the questions.
I should have roughed him up first, actually, but let's do it. I was too kind in the introduction, but we'll try and do a balanced interview.
Okay.
Looking at your gray hair, I remember just how young you were when we started doing business.
I know. This is COVID isolation hair. In the morning, it looks like Ace Ventura.
If you weren't so polite, you could point out that gray hair is better than no hair.
Exactly. I was showing some deference to my elders, right?
So I want you to, in the very beginning, take me through how you came into this business, something about your educational background and how you chose earth sciences.
I mean, everyone's got
Republic was.
It was a sort of a long, circuitous journey, like most of us. And I fell in love with rocks, living on the rock in Newfoundland, surrounded by rocks. It's a fantastic place, wonderful place to grow up. And sort of fell in love with my tribe at Memorial University and decided this is what I wanted to do. And kind of took that as far as I could academically, with stints in the exploration business in summers and traveling in the winters, etc. And I became a consultant and working for major companies around the world, and kind of decided that, I could go out on my own and, actually keep my charge out rate instead of giving it to my employer. And so did that, started a little consulting company. And, my big break came in 2000 with Rob McEwen and the Gold Corp Challenge, which is ancient history right now. That's 20 years ago.
But recite that for our viewers, some of whom might not have been cognizant 20 years ago.
Sure. 20 years ago, that version of Gold Corp was run by Rob McEwen, who was quite the maverick at the time and did something that nobody else thought of doing, which was showing your data to the whole world to analyze. And so he had, 100 years of exploration data, drill core, drill sections, and he invited the world to participate in the very first internet challenge in mining. And that started my career. So I remember I was in India at the time working for Phelps Dodge, not really enjoying life that much, and spent a bunch of time analyzing the data, submitted my proposal, and got a call from Rob's handler saying, you better come back to the PDAC this year because you've come second in the contest. And so that changed my life. That was a massive door that opened up, and I'll be forever grateful to Rob for that. And was approached shortly thereafter by two lovely men, Hugh Snyder and Wayne Beach, who had a little shell called Frontier with $1 million in the bank, and said, do you want to run this? And I jumped at the chance, not knowing any better, and never looked back.
And if you describe them as lovely, I wonder how they describe you these days. There might not be a word for that. So your career path reminds me a little bit of Ross Beatty, albeit wrong coast. Degree in geology, some business acumen, started a consulting business fairly early on. Ross said he did it not because he wanted to make more money, but because he found himself unemployable. But I suspect that might have happened with you too. So describe to me the process by which you, as a very young man, set out to differentiate yourself and Frontier from the other 1,000 penny dreadful losers that polluted the Canadian mining system. What were you going to do different? How were you going to make it in the sea of sort of scammy paper that was around then?
Yeah, I mean, I went into this with one thing I was sure of, and that was I didn't know very much about this business. And so I needed to learn everything I could from everybody I possibly could meet. And so I asked everybody everything. There wasn't a question that was embarrassing enough not to ask. I mean, I asked everything. And so whoever I could lean on for advice and mentorship and whatnot, I did. and there were lots of them along the way. And I quickly focused in on what I felt I could control. You can't control the market, you can't control commodity prices or any of those things, but you can control your approach to the business, and you can control how you apply your craft and the science to projects. And so I developed a slogan or a motto or a trademark, which has stayed with me ever since, and that is the science of discovery. And I built a very science-based team around me. I wasn't concerned about how old they were or how many wins they had under their belt at the time. I was concerned with how they thought. Were they creative? Were they willing to think out of the box and help me identify projects, evaluate them quickly, and if we made a discovery, great, we could take them further. If not, we could move on quickly. And it was the absolute core and keel to everything I've ever done over the last 20 years was that science approach. And I continue to rely heavily on building very science-driven teams.
So if I was going to paraphrase that, and I'll get off this, I could talk about this forever, but I think the listeners will burn them out pretty quick. If I could paraphrase this, just so I can take sort of a cliff note, what you're suggesting is let the data tell you what's there rather than trying to make the data conform to the target that you generated. Am I getting that correct?
That's exactly correct, Rick.
Most of your success, as I understand it, or at least as I follow it, has been in the gold business. Is that because gold geology interests you, or is it because the markets give you a lower cost of capital in gold? Is it because your technical team is attracted to gold? I've always been, myself, pretty agnostic as to commodity. I'm fine making money in sand and gravel if that's what comes around. Yeah. But I've noticed, refreshing my memory for this interview, that your career has been, with one exception at least, pretty gold-centric.
It really has. And I don't know if that's by design or just by opportunity. So, we're attracted to projects that are high quality in places around the world that we can work. And I think, maybe it's just a numbers game, but there seems to be an awful lot more projects in the gold space that fit that bill than others. We've dabbled in nickel. We've had a tremendous amount of success in uranium. We've worked in the copper gold business, but you're right, gold has become sort of the fundamental DNA of our group. We can kind of move beyond that, but you're right. Almost all of the successes we've had have been big gold wins.
Got it. So you've covered off the sort of technical aspect of what you were able to do. I've known a lot of really, really, really good geologists who couldn't sell dollar bills for 75 cents. They had no commercial capability, no promotional capability. In fact, many scientists who I've done business with have spent so long defending their thesis, they never got around to telling me what the hell the thesis was. You tended to enjoy commercial success, which lowered your cost of capital too. How was your group able to marry capital markets and technology, which of course every great financier has been able to do?
Mm-hmm. I think it comes down to communication, Rick. And the key to the people that I'm surrounding myself with is communication. And everybody needs to be able to communicate to shareholders or stakeholders in complex geological ideas and simplify them and get people to understand what the dream is, right? And if you can't do that, then you're the wrong person to be speaking for the company.
How did you deal with the sometimes cynical nature of capital markets and the, how would you call it? Manic depressive nature of investors?
It doesn't end. I still struggle with it today. I'm still having to prove myself, Rick.
Well, we always have to prove ourselves. My own technique for the cynical guys in capital markets was always to use their cynicism against them. I always practiced jujitsu, but I'm always interested in other people's techniques, particularly when they propose to use them on me. I remember very early on in your career, I was telling Georgia, I believe we financed Frontier at 50 cents.
You did.
And what impressed me was you were probably the 8th conversation I'd had that day. You know, in 2000, nobody had any money, and the only guy willing to write a check, well, there were 3 guys writing checks, I guess, Tognetti, Peter, maybe Ned, and myself. So I was popular. You know, I mean, I was almost as popular as Georgia in those days, looking like I do, right? And what I remember coming off that call was that you were able to explain in terms that I could understand quickly what the value proposition was. And you were also respectful enough about me that when I asked you what could go wrong, you told me 3 things. And that was what really set you apart. I remember that day clear as a bell. You had a lot of competition, which you didn't know about. I was taking money call after money call after money call. And I was impressed. I was thinking, you know, yeah, I guess I could lose money on this, but I don't really see how in a bad market like this with a young guy as smart and this enthusiastic. So congratulations. And I hope you're able to go out and hire a couple of young Marco Days so that when you hit your declining years like me, you can rest on their laurels like I've rested on you. I want to, now that I'm done flattering you, I want to pick your brain on a few things. Because one of the things I've always tried to do at my conference when I interview people like you, and I've interviewed you yourself, is get the leaders in mining and ask them to explain to investors how the process of company building in capital markets has made them better investors, and what things you've learned, what skills you've learned, what skills you possess are transferable. So I'm going to turn that into a series of questions. I just wanted to get you and the listener in the right frame of mind. How have you built value in mining, and how do other promoters and entrepreneurs legitimately, I'm not talking about the paper hangers, legitimately add value? How do you raise 10 million, 20 million, 50 million, 60 million and turn it into $1 billion, not swindling widows and orphans, but in fact using the money to build wealth?
Okay. All right, well, I've already touched on the importance of the team around you. So for the balance of this conversation, we're going to assume that I've got the best exploration team on the planet, or one of them, and that's a massive prerequisite for creating value. The only thing. And I guess the 2 things come to mind to answer that question. One is timing and one is location. And in terms of, on the timing theme, there is no such thing as an overnight success. There is no such thing as a quick flip here in creating value. It takes, in my experience, 5 to 10 years to gestate and create a real mining company or exploration company that's successful. And I don't see any shortcuts. Frontier was a 10-year success. Aurora was a 7. Blue Gold and True Gold was a 5 collectively. True North Nickel was a 3. And between those 5 companies, and I ran all 5 of them, we created $3 billion in value from 2001 to 2016. And the themes that stitch those together and the ones that define Oxygen today are timing and location. And timing really comes down to the core belief that you have, which is be countercyclical. So if you can deploy capital in bear markets when nobody wants assets and get them for cheap, then fundamentally you're positioned to create value if you're successful with them. If you overpay for them, you've eroded all your value making ability and you're hooked. And so for the past 7 years or 6 years, looking at the current generation of Oxygen Capital companies, we have done everything in our power to buy tier 1 assets cheaply in tier 1 jurisdictions, raise and deploy capital to create all this potential energy for it to be unsprung when the price of the commodity rallies. And, you know, a couple of examples, you know, with Liberty, we bought Black Pine for $1 million. It's created 150 million to 200 million in value for us already. At Discovery Metals, we bought the Cordero project for $10 million, and that's translated into 100 million in new value. And lastly, and sort of most relevant to this conversation, is Pure Gold. We bought the old Claude asset called Madsen at the time for $10 million. And that has now translated into a $300 million value and has become Canada's next gold mine, right? So we are the 5th highest grade mine in Canada, the 17th highest grade mine in the world, and we'll be pouring gold before the end of the year into, in terms of timing, into a very buoyant gold market. In fact, at all-time record highs in Canadian dollars, we're at $2,400 an ounce, which translates into a margin, production margin of about $1,300 or $1,400 Canadian per ounce, or 900 US per ounce. I mean, those are massive margins, and we've gotten the timing just right on all 3 of those things.
You know, I think you're at an interesting place here. One thing I've learned financing guys like you is that when somebody has enjoyed a couple pieces of success and developed long-term backers, that there's a virtuous circle that most investors don't see. The successful team gets to see the best projects because the people who have them want to see them with people who succeed. They have a lower cost of capital because the expectation on capital markets is that these guys are going to be a success. They attract the best people because the best people want to have access to ample budgets and they don't want to be unemployed next year. It's amazing to me how many punters, how many speculators out there I see that don't understand the value of personal brands. Simply put, the lower cost of capital. So tell me how you think that the lessons that you've learned in building the Oxygen group of companies have made you a better speculator personally. And what lessons do you think are transferable to the audience that George is going to attract to this particular podcast?
Just coming back to the importance of your brand and the currency that comes with, I think it's absolutely fundamental that groups that get financed repeatedly get financed not because necessarily the investors think that the project that they currently have is going to be the one. I mean, they're mature enough to know that there's failure in this business and Mother Nature does what it wants, but that if it is a failure, then that group is not going to rest on its laurels, but is going to find the right project and is ultimately going to make the money at the end of the day. So having that conviction and honesty with your shareholders that come into the story, we've got a 3-year thesis that's going to take to test this and build it out, and attracting investors who buy into that and have the patience and understand the risk reward is something that I think you've got to communicate up front, and you get repeat business. But in terms of, lessons learned as an investor, I think the first one is everything takes more money than you think, right? And so if you are planning to, explore an idea, it's going to cost more money. So raise money than you think it's going to take, because the companies that have more money in their treasury to do work on key projects and take them further realize greater valuations. If you're constantly financing $1 million at a time, you get nowhere. It's a complete and utter waste of time. But if you've got $20 million in the bank and you can take a project from milestone A to milestone B and unlock that floodgate of value, then it's worth every penny. And so, and that's one lesson learned. Another one is, things go wrong. Things go wrong that you don't expect, whether it's geopolitical or social or what have you. So, you better be really sure about what you can and can't control in your business. And one thing you can control is the location that you decide to work in, right? You want to pick a project that's located in an area that you have a good shot at permitting it and advancing it, rather than borrowing trouble at the beginning by investing in a jurisdiction is rife with strife and uncertainty in that area. So, it's amazing the number of assets around the world that are orphaned because they're in the wrong location. So focus on location.
I've come to the cynical point of view in my declining years that every jurisdiction in the world is a bad jurisdiction, but we'll drive on.
Yeah.
past that. You did a good job of answering the question from an entrepreneur or issuer's viewpoint. But what I want you to do now is pretend that you're at the Cambridge conference in Vancouver, and rather than standing behind the Oxygen Capital booth, that you're one of those people in front of the booth, one of the people trying to learn rather than dispense lessons. What have you learned that you could impart that would make those people better and more successful speculators and investors?
I would say be wary of companies who lack transparency or who come up with reasons for not quantifying things that ought to be quantifiable, like a resource or an economic study. You know, for example, there's only one reason a company doesn't put out a resource after 3 years of drilling, right? It's because the number is less than what people believe it to be, and they don't want to face that music. So you really want to invest in companies who take their investors along with them through the milestones of growth and development in a very transparent way. So these are our drill results. It's a very well-trodden path. Here's our resource. This is our economic study. These are our permits. And be inclusive. And every one of our companies do that, for better or for worse. And so I think as an investor, you want to at least get that feeling that you're being spoken to and being brought along in the story in an honest, transparent way.
Anything in the balance sheet or income statement that steps out to you from an investor's point of view?
Yeah, you do not want to be investing in a company that is stuck in that corrosive dilution spiral, raising $500,000 at a time, because as I said earlier, you're not going to get anywhere. And ultimately, you want to be investing in groups that are backing their own deals. So management and boards that have skin in the game, whatever that might be for their own capacity, but they have to own the stock, and they have to, they've got to put their own capital at risk.
I remember once interviewing a company in Vancouver with our mutual friend, Doug Casey, in the 1990s. I'm normally more polite than Doug, which is not a tough test. And I remember in the middle of the interview, Doug says to me, "We can leave now." But the guy was in his pitch, right? He says, "We can leave now." And I looked quizzically at Doug. He says, "Look at here, Rick. This guy doesn't own any stock. If he's not going to get rich, why would he work hard enough to make us rich? We're wasting his time. He's wasting our time. Let's go." Which, that lesson's always stuck with me. The abrupt nature of it was amusing in retrospect. Yeah. So let's see where the rubber meets the road now, if you'd like to go there. Tell me why I should care about Pure Gold.
Pure Gold is coming out of a very sort of dull part in the Lassonde curve, as we all know. So we're coming through construction right now. We've gone through the growth phase, of phase one anyway. We've drilled off 2.5 million ounces of almost 9 gram per ton gold. It's the highest grade mine in development right now in Canada, and truly is globally significant. It's the 17th highest grade gold mine around the world, which is pretty impressive. And we'll be pouring gold before Christmas. So as the next in line operating gold mine in Canada, it is perfectly positioned to enter this buoyant gold commodity price environment and go through the re-rating that's going to happen. I mean, it's a well-trodden path, and it's going to follow the same trajectory that whether you're, Atlantic Gold or you're, Victoria Gold or whatever the latest producers have been. I think there's an easy double here. I'm not giving investment advice at all, but just to catch up to junior producers out there that are trading at 1x NAV, there's a double here on our phase one mine plan. And our phase one mine plan is just the first 1 million ounces. And at $2,400 an ounce Canadian gold, I mean, this is going to generate $1.3 billion in pre-tax margin, right, on the very first phase of growth, with a project that is incredibly scalable. So this is a project that, by converting additional resources to reserves, can scale up very quickly to 150 or 170,000 ounces a year and become a meaningful company maker asset that's going to go for generations. And we've barely scratched the surface. I mean, this is a deposit that we've only drilled down to a kilometer to get down to the depths of mining and the Red Lake complex up the road. We have another 1.5 kilometers to go. If there's 5 million ounces in the upper kilometer, we know these things have deep roots. There's a very good likelihood there's another 5 million ounces in the extension of this thing. So it's a 10 million ounce, potentially a 10 million ounce ore body. 2.5's already been mined out historically, and the rest is sitting there. I mean, they left the real prize behind, and we've got our teeth stuck into this thing, and we own it 100%.
So let's unpack this a bit. What you're telling me is the catalyst, the thing that's going to change things, is the re-rate that happens between now and the time that you raise steady state production, the near-term catalyst. Is that right?
That's right.
Are you fully funded to get from here to there?
We are fully funded, so we're overfunded.
So your belief is that this should happen. What is it about your background? Have you built gold mines in Red Lake before? Why do I care what you think? How do I know that the fact that you believe this is going to happen is some indication that it might happen?
Yeah, well, we've been down this road before, Rick. And
have you ever worked in Red Lake before?
I've worked. I have worked in Red Lake before. In fact, the Red Lake specific knowledge, operating and exploration that's on the team at Pure Gold is second to none. I mean, we've all cut our teeth in the Red Lake camp. We know the geology. We know these assets. We know how the production works. And if you look beyond Red Lake, I mean, here's an interesting statistic for you that since 2016, 4 short years ago, the Oxygen Group has delivered 3 operating mines to the world. In that period, there have been 43 new gold mines around the world brought into production. If you include the Pure Gold asset, which will be in production in a few months, we're 7% of that, right? So in 2016, Long Canyon hit commercial production, Newmont built it. Karma hit commercial production, we built it. And Pure Gold is going to hit commercial production, and we built it. So,
and Karma might, in terms of the question that I'm asking, be the best answer. In effect, that was on time, on budget. You did what you said you were going to do.
We did what we said we were going to do. We poured gold. We immediately got taken out. Mm-hmm. And through that takeout, we took back Endeavor paper. That paper doubled on the back of that growth. And our shareholders did extremely well. I mean, it was bottom of the market. The face value of the takeover was about $250 million. By the time it re-rated, it was a $500 million deal, all paper deal, and everybody did extremely well.
One of the things that should stand to easy reasoning, but people don't seem to reason, maybe because they have other lives. Talk a little bit about the fact that gold is priced in US dollars, which has been strong, which is to say the selling price of your commodity has done very well, but your input costs are denominated in Canadian dollars, which has been falling, which is to say that your input costs fall at the same time that your product price rises.
Yeah.
And further, underground mining operations have traditionally been energy intensive exercises. And I would suspect that falling energy prices, be they petrochemical or electricity, has got to be an enormous benefit to your margin, with all of your inputs falling in Canadian dollar terms, especially energy. The same time that your product price is rising, it must have an amazing and continuing impact on potential margins.
Yeah, it does. And so it's almost a perfect storm for gold in Canadian dollar terms. I mean, it's a perfect storm for gold in general, given what's happening globally, unfortunately. But for Canadian dollars in particular, you've got a falling Canadian currency relative to the US, and all your costs are in Canadian dollars, building and operating this mine, and you're selling a product in US dollars. So imagine $2,400 Canadian. That's higher than the price of gold in Canadian dollars in 2011, when the US dollar and Canadian dollar were at par, right? So this truly is an all-time high, and we're going to capture that. In terms of operating costs like electricity, one of the biggest costs for an underground mine is ventilation, is pumping all that air and keeping the air clean and fresh. And one of the novel approaches we're going to be taking once we get down to a certain level is we're going to be running an electric fleet. So this will be an electrified mine underground with not relying on diesel, which means not only our input costs going down, but they're being eliminated to a certain degree because we're not going to need to flush out all that diesel fumes.
Got it. And finally, do you and the team have any preference as to when you get paid? Do you see yourselves building a Canadian gold miner, or do you see perhaps a repetition of the earlier successes in your career where you did the heavy lifting and sold retail to somebody whose job it is to operate mines over time?
It's a good question. I think what's nice about the story is that it sort of ticks a bunch of those boxes. So there is very much M&A possibilities here. I mean, this is one of the very few projects at this stage in this jurisdiction. They're very rare, having a shovel-ready producing mine available. So I think it is a target. And I do think the re-rating and value creation that comes with becoming a producer and participating in this cash flow that's going to be quite impressive when you look at the price of gold is going to crystallize a bunch of value as well to shareholders. So it could be either. You know, from my point of view, as a big shareholder of this, a 30% premium on the share price today is not particularly exciting to me. I can see this stock going a lot higher through a well-executed production scenario.
I want to thank you both for your time. I've enjoyed speaking and listening to you both. Mark, can you perhaps share Pure Gold's ticker and let our viewers know where they can follow along with your ventures?
Okay, so Pure Gold trades on the Toronto Stock Exchange, the Venture Exchange, under the symbol PGM. And the company can be followed along at puregoldmining.com is our website. And if you're interested in receiving information, just send a note on the website and to request information, and we'll send it to you.
Perfect. Well, thank you so much. And Rick, how about you? Where can our viewers get more information from you?
Same offer as last time for me, Georgia. If you enjoyed all of this interview, the best thing for you to do would be allow Sprott to add some value to you. Specifically, we will rank your existing natural resource and precious metals equities portfolios, including Pure Gold. If you email those to me, names and symbols in text, not as an attachment that an old Luddite can't open. The email address will be in the links. I believe it's sprottusa.com/rankings. We will rank your portfolio 1 to 10, 1 being best, 10 being worst, and comment on the individual stocks where we think our comments might have value. We will also send you a copy of a 50-year chart from Barron's magazine, the Barron's Gold Mining Index, which is the most comprehensive and longest dated gold mining equities index that there is, which will provide graphic evidence to our assertion that we're early in a gold equities bull market. And finally, we'll send you a 100-year commodities chart, not because we think that the industrial commodities will turn up soon, but simply because you will see from the chart that on a 100-year basis, they are very, very undervalued relative to other asset classes. So an email with your natural resource holdings to sprottusa.com/rankings. We will rank the stocks, we will comment on the stocks, and we will send you the Barron's Gold Mining Index chart and the 100-year commodity chart. And Georgia, thank you so much for this interview. It's been fun watching you grow through these conferences, and I'm delighted to see the next stage in your career. Mark, thank you for occasionally making me look smart, which I recognize was difficult from time to time.
Thank you, Rick, for all your support over the years, and thank you, Georgia, for organizing this.
Not a problem. Well, you guys stay well, stay healthy, and we'll chat soon.
Thank you, ma'am. Thank you, sir.